Hi, this is Jack from Alpha Charts with a state of the market video. Today is April 24th, 2021. Before we get started, this video is for educational purposes only. These are not recommendations to buy, sell, or hold any stock or security. I may hold positions in some of the equities mentioned. Know your time frame and risk tolerance. Also, if you like these videos, please like and subscribe to my channel. It really does help me, so I do appreciate that. You can also find me on Twitter at AlphaCharts365. Okay, so let's go ahead and get started. We always start with the SPX, and SPX is right at all-time highs. There is nothing bearish about the index going at all-time highs, so I can't really argue with that at all. That's what the price says. Moving average is moving nicely higher. This is just consolidating through time right now. So nothing really to see here. Everything looks good on the SPX. Now the Qs tell a similar story, right? So we had this big up, and now we're just moving sideways. So price is the only thing that pays, and so that's what we go with. But there are little things in here that make me a little bit more cautious, which is the decrease in volume on the way up. This sideways movement, you had some distribution in here as it's moving sideways, and you're showing a little bit of a divergence over here on momentum. Now, next week, if price continues to go up, then this divergence is kind of busted, and we'll see what happens. But as of right now, it's there. So, again, decreased volume on the way up, some distribution, and then, again, even a great day on Friday came on lower volume than the day prior. It is what it is. We're still above this area, and I think right now, 333 becomes the area to watch. I'm going to make that a little bigger right there. Yeah, I think 333 is the area. Obviously, this is right where price stopped 1, 2, 3 times. And the 23-day EMA is coming up to that area. It's at 332 basically right now. So it's coming up to the area. So that is going to be the battleground. If it stays above 333, 334 even, I think that it's fine. It's just marking time and marking this consolidation through time. If it rolls over, then it'd be a price correction. But as of right now, it's just time. So that's great. IWM, again, just this big uptrend here, and now it's just moving sideways. So it's consolidating through time. I think that's the bullish scenario, right? You gotta consolidate all this movement. So that's what we're seeing. Get rid of RSI. Is this some type of head and shoulders top? Probably not. But we don't know. It's above the 23-day, which is basically flat, right? It just got back above it. So we'll see what happens next week. Nothing that I am running out to buy right now, because a flat moving average means that the trend is sideways. All right, so let's look at the individual sectors that are important to me, XLF being one of them. And you see closed at all-time highs, it looks like. So that looks pretty good. And just to give you context on the weekly, this has been a major breakout since 2008, all the way down, right? 2007 actually. Yeah, 2007. So this is a serious breakout right here. It is still working, and financials still seem to be, leading the market really. SMH, on the other hand, is having some issues up here, right? And I think this is the most important sector or subsector, if you want to call that subsector in the market. So we're still above this trend line that I drew in here, which is great. And it's not really doing much. Maybe some type of, consolidation, inverse head and shoulders, cup and handle-ish. A little deep for the cup and handle. Yeah, 6% pullback there. And yeah, so it's a little bit deep, but not crazy yet. I think as long as it stays above 241-ish, it'd be fine if you want to look at it that way. Either way, whatever you want to call this, it's consolidation. So hasn't done anything wrong yet, but it's definitely not leading the market at this point, like XLF was. So just something we're watching. Again, nothing wrong, nothing right. Still kind of a limbo type of scenario. All right, let's look at wood. Lumber, light pullback. Not light, good volume, but a pullback into the 23-day EMA. Nothing wrong with that. As you can see on the weekly, this again was a major breakout. So a consolidation week or two, kind of makes sense. We'll see it again. Volume was kind of high on that one, but still not doing anything wrong. Still in an uptrend. So that's lumber. Let's look at them. I haven't looked at SPX TLT in a while. I have no idea what this one will show. Let's take a look here. All right, you can see, SPX outperforming bonds. That's as you would expect. So let's just go to weekly just to get a context. Yeah, look at this. Just nothing wrong with that, right? SPX screaming higher from bonds ever since the March lows and going at all-time highs. Well, that's good. All right. So I think the chart I am watching that is the most important chart out there is TNX, the 10-year. Here's the 10-year on the weekly chart. So this was support here. It failed there, right? Came back up, screamed through it, and now it's coming back trying to potentially retest, we'll call it the 1.5-ish level, right? Let's go back to a daily. And if you see on the daily, this is kind of like this pullback that we're having. So I don't know what's going to happen. And maybe this was already the pullback to be had. And, they tested 1.53. I don't know. But if it gets into this green zone, what it does there will be very important. Do we break back below like this? And if we do, that'll give us some information. Or do we bounce and scream higher and more like this, right? That'll give us information. These slow grinds and sideways movement, that's not information. It's the big moves, the velocity of the move that really interests me. So again, it's the action of the price of the yield that I am most interested in. And I think that what it does here will tell us what the market wants to do. So we'll see. A scream lower is a flight to safety. A scream higher, and it tells us that it's going to cost businesses more to borrow money, cost people more to borrow money, and it may slow down, at least in the short term, economic growth. Slow grinds doesn't really matter. So we'll see. Looking at the spread of government bonds versus high yield bonds, and you can see that we have been just kind of toying with the 23-day EMA a lot of times. It did it again this week. Now it's back below it. So unless we get, something that looks like this, right? I'm not really that interested. It's grinding lower. Everything looks absolutely fine. If we see a big spike, even something like this would get me very cautious, right? That would get me very, very cautious because it's developing maybe into something like this. But we're not seeing that. We're seeing this slow grind lower. Again, every time it spikes up, it comes back down. So that's bullish, in my opinion. The VIX continues to just kind of, grind lower. Yes, it spiked up this week, but now it came right back down. We're at 17.3. Not crazy high in any way, shape, or form. And we actually snuck below this 16.5 level back on April 16th. So this looks fine. There's no, again, we're looking for things that look like this, right? Even stuff that looks like this would be a little bit more worrisome. And then, but we're not seeing that. We're not seeing any of that, you know. So moving on past VIX, let's look at the put call ratio. Equity only put call, so it takes out the people that are looking for hedging. And there is no signal here, right? Our signal is really up here. When we see extreme fear in the market, that's my signal. So this grind sideways like this, no signal. It maybe shows maybe some complacency, if anything, but that's not a signal. So nothing to see here as of yet, except for maybe some complacency. Nothing I'm worried about though. Value line geometric index. All right, so here's another one showing some sort of divergence. So this is a breadth indicator that I use, and you see that as price is grinding higher, momentum is declining. So there is a bearish divergence there. It doesn't tell me a ton because let's be honest, there was a bearish divergence here, and what did the market do? It kept going higher. It marked it through time, and this could potentially do the same exact thing. So, again, this was like that. So anyway, so this could do this exactly the same thing. So it's not giving me an indicator except, maybe caution is due, but nothing crazy. Let's look at the MMFI, which is the percent of stocks above the 50-day moving average. It's at 57.48 right now. It's still making lower highs and lower lows. So I am aware of that. And it did get to a low of 46 on a closing basis. Okay. Again, not an extreme measure by any means, and has been back in this area, numerous times and even lower, and the market has, just come right back up. So, that was extreme, right? Back in March, when basically the entire market sold off and only 2% or so was above its 50-day. We still have 57% above the 50-day. Not screaming bullish, but not crazy bearish is what it is. Let's look at gold real fast. So gold on the weekly continues to try to carve out a bottom. Yeah, I don't know if this is the bottom for gold or not. It's maybe some sort of inverse head and shoulder, cup and handle, whatever, has not confirmed yet. So you hate to, I'm not a gold bug by no means. Something I'm watching. If we see this break the downtrend line, if we see it get above, 183, 184, that would be a big deal. Especially kind of making a rounding type bottom. That may not happen for months. So no reason to be involved in gold. Miners were looking good for a while. Kind of came back, retested, still are kind of not looking bad. Miners, have my eye on them actually. But that's kind of interesting how it came back, retested the breakout, moving higher. So you're seeing a little bit of bid in there, which I think makes things interesting. Looking at another growth area, FFTY. So this is IBD Innovators 50 ETF. It looks a lot like the Qs. Actually, it looks more like QQQE. No, actually, it doesn't. Oh, those were worse. Nope, it looks worse than everything. So this has a lot of work to do, and this could just be basing, right? We'll see. RK, same thing. This is another ETF that is high growth names. So you see those have gotten hurt the worst of all by far. So just be careful if you like growth names. I do like growth names too. As a positive, my screener yesterday started to show a good number of names back on it, which I really liked. That's a positive. Also next week, there are a ton of earnings: Apple, Tesla, Amazon, Google. Oops, how should I type it right? Google, Facebook, right? I mean, they all have earnings next week. So just be careful with that. Again, so the market right now hasn't done anything wrong, but there's still a lot of potential questions in it. I think Friday was a positive, even though it was on lower volume. RSP is going on all-time highs, so that's a positive too. Just be careful out there. I'm still in a good bit of cash, so I'm gonna wait. I want this market to really confirm what's going on before I jump in there. Maybe I'm overly cautious, but that's me. I rather wish I was I'd rather be out and wish I was in than be in and wish I was out. All right. Y'all have a great week. Be careful. Again, lots of big earnings out there which will move the market. Have no idea which way. If you like this kind of video, please like and subscribe. Again, I'm on Twitter at AlphaCharts365. Thank you very much.